Hello ladies and gentlemen, Greg McCloskey from ForexLive.com. This is a Kickstart video. In the Kickstart video, I take a look at three of the major currency pairs: the euro versus US dollar, dollar versus yen, and sterling versus US dollar from a technical perspective. So let's get started. If you watched yesterday's video, I started by looking at the daily chart, and I focused on the 102 level. That level was the 61.8% retracement of the move up from the 2022 low to the 2023 high. That price was broken in trading yesterday, with the price moving down. You can see it better off the hourly chart to a low of 1.01763. But then we started to trade above and below the level. We did try to keep a lid on the pair against the low price from last week's, or from last week's trading, which came in at 1.0222. You can see the high prices that came in right here and right here. But then at the end of the day, we broke above that level, and we started to see for increased momentum, pretty fast increased momentum that took the price up to this area right through here, which comes in at 1.02772. Also, the falling 100-hour moving average, I warned about that both those levels being targets on the top side that would give the buyers and sellers a battle. And indeed, the price did stall against that level. In the early Asian session, we fell a little bit lower, but then rebounded back again toward another retest of this level. So technically speaking, what do we see? Well, we see the 100-hour moving average and this swing area to help defined by these swing levels coming in play for traders. If the price can stay below that level, then we have the potential to move back to the downside. If the price moves above that level, that's a victory for the buyers, and we could expect or look for a rotation toward the 200-hour moving average that comes in at 1.0302. So key level here through the PPI data, which will be released at 8:30 a.m. Expectations of 0.3 for both the headline and the core reading. Be aware of that. Let's take a look at the dollar versus yen. And if we look at the dollar versus yen, we continue to trade in up and down ranges. Yes, the price did extend above the previous highs. If I put a red box around this area right through here, this is where most of the price action has taken place, but we did extend higher on Friday's trade. That was off of the U.S. jobs report, getting above these levels right through here. In between sits this cluster of moving averages. Cluster moving averages defined by the 100-hour moving average. That's the top blue line. 200-hour moving average. That's the green line right here, and then the 100-bar moving average on the 4-hour chart. And you can see that in trading yesterday, we tried to stay below at least the highest of these moving averages, but breaks below the lowest of the moving averages failed not only yesterday but today. And in trading here today, the second time the price came down toward the lowest of those moving averages, the 100-bar moving average on the 4-hour chart, we did find support buyers. We have since moved above the 100-hour moving average, which tells the bias more a little bit into the buyers area again. As the price continues its up and down movements here, with more of a positive bias, I have to say, because we do have higher lows through here. 1, 2, 3, 4. All these different lows are higher, and the moving averages, although broken, they could not sustain the momentum to the downside, and we're back above those moving averages. So positive bias as we go into the PPI data. If we move back below the moving averages, however, all bets are off. We would expect, or I would expect, that the price would instead start to take out the previous lows and maybe move down toward these areas right through here, defined by different swing lows here, here, and here for the dollar versus yen. Finally, let's take a look at the sterling versus US dollar. And this currency pair move, go to the daily chart to the lowest level, going all the way back to, November of 2023. Staying on this chart, the next key target area for the sterling versus US dollar on the downside would be these swing lows. They come between 1.20387 and 1.20686. In trading off the 4-hour chart yesterday, we here are those levels right through here. We got to a low of 1.20958, just below the 121 level, but could not keep the momentum going. The price has been moving up rather sharply to the downside since peaking last week right against the 100-bar moving average on the 4-hour chart. You can see that right here, down, 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 So today we finally get a rebound back to the upside. That rebound to the upside is taking the price back up toward. Let me fix this line right here. This low price right here came in around the 122.38 level, and a high price move just above that level and started to rotate it back to the downside. So we're going to have to see that price get above the 1.2238 level to increase the bullish buys in trading here today. As you can see, just a modest correction in what has been a fairly bearish move to the downside. I'm going to move this back to the hourly chart and take a look at what the retracement will look like from this peak right here to this peak right here. This is the high price from last week's trading to the low price that we saw in trading yesterday. 38.2% retracement comes in 1.2280. Also in play, may have helped the sellers in trading here today, was the fact that the 100-hour moving average, the price was approaching that 100-hour moving average. And you can see the price tried to get above the 38 level. That was at this low right here, but found willing sellers ahead of the 100-hour moving average, just above that 38 level. So be aware of both the 100-hour moving average, 38.2% retracement, and this 38 level, all as resistance levels on the top side for the sterling versus US dollar. So there you have it. I hope that kickstarts your trading day ahead of the PPI data. My name is Greg Bacalowski. Good fortune with your trading. Bye-bye now.